India on Thursday reported 3,303 fresh COVID-19 cases, the most in over a month, as infections continue to increase across countries led by the spread of the new Omicron XE subvariant. With the uptick in cases, risks of a possible fourth wave and subsequent lockdowns continue to linger. But market analysts believe the outlook for relevant sectors remains strong as the current situation is not alarming.
So there seems to be some anxiety with some recent spot in the COVID cases in the countrywide, although not very alarming, because even today at a country level we just have about 2,000 odd cases on a daily basis, from the peak of almost 2.5 lakh to 3 lakhs. And I think for a country of our size, which is almost 1.4 billion population, I think 2,000 cases is nothing to be worried about, at least at this point in time. In fact, we have invested in a lot of businesses which are part of this open up of the economy. So, for example, investments in the restaurant business, investments in hotel business, investments in media and entertainment, outdoor multiplexes business. So, like for example, we've been talking to a company which is into a soft beverages business, and they seem to be running at full capacity utilization. In fact, they're virtually chock-a-block as far as the utilizations are concerned at this point in time. When we talk to with our portfolio company, which is into a vacation hotel business, their occupancy levels are also running for all-time high, almost 85-90% plus. We've also invested into a multiplex business, and as you all know, the kind of the box office collection that we've seen movie after movie, right? That's also very, very strong. We've also invested into a restaurant business, which is a leading QSR, and they also seem to be doing quite well. In fact, I believe the last quarter was very good for Q4 of FY22, and I believe the April month is also doing well. So we believe that the consumer sentiment is very strong. They continue to be confident of going out, and the situation seems to be under control at this point in time.
From the pack, stocks of hotel companies such as Lemon Tree, restaurant brands Asia, Mahindra Holidays and Taj GKV have gained 4 to 14% so far this month, as occupancy levels are healthy with wider vaccination coverage and ease in restrictions. Rating agency CRISIL expects a sustained recovery to result in a gradual improvement in the hospitality sector's financial leverage over the medium term. Strong pent-up demand for leisure travel, opening up of international and corporate travel, and wide vaccination coverage should catapult the revenue of the Indian hotel industry by 45% from a decadal low last fiscal and almost match the pre-pandemic levels. The agency further expects a rebound in revenue and leaner cost structures to drive up operating profitability of the sector by 200 to 400 BPS points this financial year versus financial year 2020. Apart from hotels, analysts are also upbeat on quick service restaurants that have seen robust sales recovery in the last few months. Recent channel checks by brokerage Motilal Oswal indicated strong sales growth momentum for quick service restaurants across all brands, similar to trends in February and March. Reversal of restrictions continue to boost mobility, contributing to the healthy recovery in dine-in for both high street as well as mall outlets. Dine-in players are doing better as expected, while delivery has not only sustained at much higher levels than pre-COVID, but has also received a sequential fillip in April. That said, a trend of revenge traveling is also being seen across the board, which has improved prospects for airline companies as well. As per the Directorate General of Civil Aviation, around 1.06 crore domestic passengers travelled by air in March, nearly 38% up from February. The passenger load factor, which means occupancy rates, was also above 80% for all domestic private carriers during the month.
So in the aviation sector, by default, Interglobe Aviation is the largest service provider, has the largest market share, very strong fleet of aircrafts, realization per seat is going up, occupancy is quite decent. So we remain positive. The only issue is short to medium term, the cost of aviation turbine fuel. But as we have seen in the last 3 to 4 months, most of the fares locally and globally have gone up, keeping in mind the higher KTF prices. So I think that pass on has been done. So we remain positive, and the binge or revenge traveling that has been undertaken is extremely visible in terms of the numbers and the occupancy run rate as far as the aircraft flight is concerned. So positive on interglobe aviation, and on the multiplexes, PVR, one of the largest exhibitors in terms of Bollywood and Hollywood releases that we see. So over there again, the occupancy is going up.
Therefore, the outlook for contact-intensive sectors remains robust as the economic impact of each COVID wave has been milder than earlier. However, the street will monitor Q4 results of related companies in the days ahead to have a better understanding of the earnings recovery. Meanwhile, on Friday, big corporate names are slated to release their March quarter results, including Maruti, Wipro, IndusInd Bank, SBI Cards, Ultratech Cement, and Tata Chemicals. In addition, investors will closely monitor the US Personal Consumer Expenditures Index and other global cues for market direction.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.